So I want to warn you, today's video is going to be somewhat controversial for some of you out there. We are going to be talking about private equity and the lack of transparency in the overall antiques and collectibles trade. Now, back on August 25th, 2024, my newest article was published by Antiques and Auction News, and it was entitled Private Equity and the Lack of Transparency in the Trade. So I am going to be reading this article verbatim to you, and I'm going to also give you some further talking points because I think this is something that needs to be discussed more on a lot of online collecting forums, Facebook groups, and the like. If you guys really want to protect the validity of the antiques and collectibles trade from a financial perspective, meaning you're one of these people that come into my comment section that tells me, Sean, I'm going all in. I'm investing all my money in Pokemon cards or video games or rare coins or comic books, whatever it is. You're not listening to any of my advice. Please understand, if that's you, you should be pushing for common sense regulation in these markets. And I don't think a lot of you really still understand how money flows through the antiques and collectibles trade. So without further ado, I'm going to read this article verbatim, and we are going to have a discussion on this because I think that this is a talking point well worth discussing, even long after this video fails to do anything on the YouTube algorithm. Because every time I do a video like this, I'm lucky if the video gets 1,000 views. A lot of people do not like having these hardcore conversations. They just want to believe that because they like Pokemon or comic books or video games or Star Wars or Boba Fett's. Did I trigger anybody out there by my pronunciation of Pokemon and Boba Fett's? Those of you that love those collecting categories, I don't think you realize that for those collecting categories to be valued over the long term, there needs to be some form of regulation in these markets. Regulation benefits investors. This is why if you choose to invest on Wall Street, the financial markets, those markets are heavily regulated. Yes, to be fair, there's a lot of insider trading. There's a lot of hanky-panky that goes on in the financial markets. But if you're parking your money in an S&P 500 index fund over the long term, you really have nothing to worry about, especially if you're putting your money there for decades on end. Meaning some of you guys that are in your 20s, 30s, or even if you're my age, if you're in your late 40s, if you're putting money in an S&P 500 index fund and you're not going to touch it for 10, 20, 30 years, there's very, very low risk there. When we talk about investing in the antiques and collectibles trade, that is the exact opposite of Wall Street. There's a lot of risk here. So without further ado, I'm going to read this article. I'm going to give you more of my thoughts on this article that didn't make it to print. And I'm also going to ask for your comments and feedback in the comment section below. So here we go. I have long argued that the antiques and collectibles trade no longer belongs to the average collector or enthusiast. Auction companies and third-party grading companies now control these markets with an iron fist. The collecting categories that these companies choose to promote vastly influences both collectors' and investors' tastes, who now view these markets as a valid alternative asset class. Over the course of the last decade, more capital than ever before is flowing freely through the antiques and collectibles trade. In fact, according to an article that premiered on the website CLLCT, the collectibles trade is estimated to grow to a whopping $1 trillion by the year 2033. If this number is to be believed, and given the current value of the collectibles trade is valued at about $600 billion, this number represents a potential growth rate of about 40% in just the next 9 years. Make no mistake, I do not dispute these findings. Speculating and investing in antiques and collectibles used to be done by a select few diehard enthusiasts who knew the risks as well as the treasures they were attempting to profit from. Today, thanks in part to online collecting forums, social media, investing in alternate asset classes like antiques and collectibles is quickly becoming the norm. And while I do think way too many so-called speculators and investors are taking on an enormous level of risk by choosing to go all in this asset class, I am just as concerned as to what is happening behind the closed, fancy ivory doors at high-profile auction companies and third-party grading conglomerates. Do you guys see? I make a lot of enemies on a daily basis in the antiques and collectibles trade. I am not loved by auction companies and grading companies like you guys think. Just because I tell you that grading or third-party grading is a necessary evil in the antiques and collectibles trade doesn't mean I'm going to be taking a job working for the Certified Collectibles Group anytime soon. The same is true on the auction scene. Heritage Auctions is not going to be beating down my door anytime soon, offering me a high-profile six-figure job. I assure you that, because I continue to criticize a lot of these companies while simultaneously doing business with them. Case in point, I can sit here and ask for more transparency in a lot of these companies, and I can still log on to Heritage Auctions and start bidding in their latest Star Wars auction or comic book auction or rare coin auction. Consequently, I can also take an item, have it graded by CGC or AFA or PCGS or PSA, and still write an article criticizing those companies. Because again, we're not at a point of 100% transparency. Do you guys understand my conflict, my dilemma? When you guys come to me for consulting, even if you just send me an email, you're not even a client of mine, I take that email in the utmost confidence and I try to give you my best possible advice. I'm not in anybody's pocket, and that's what drives a lot of people crazy. And right now, what I am noticing is, as this channel grows, there is some type of, I want to say this, an informal agenda to kind of take me down. Like, there are people out there that do not like me. And what's very interesting, one of the things that I've noticed about this channel is, in the beginning, it was the collectors not understanding that I actually had their backs. I was probably one of the only honest sources on YouTube telling you that, hey, if you're going to invest in these markets, there's a lot of risk. There's a lot of hanky-panky going on behind the scenes that we can't talk about. And if you're not going to listen to me, then at least try to profit from how I view these markets. For instance, what is it that I always tell you guys? You need to sell into the hype. You don't buy into the hype. Now, you may hate me because I'm one of those assholes that made money during the graded video game bubble, but you got to realize that's exactly what I do. That's how I make money in these markets. I am not beholden to any one company, whether it's a grading company, an auction house, a collector base. I don't care if you come to me and you say, Sean, I know that you have six figures in coins and currency. I will never collect coins and currency. It's okay. If you don't like coins and currency, if you don't understand the idiosyncrasies of that market, I don't want you to put your money in coins and currency. Because if you do, you're going to get slapped in the face with a stale donut. It's not going to end well for you. As a matter of fact, if you do get slapped in the face with a stale donut, you're probably going to think of the antiques and collectibles trade as a scam. It's not a scam. It's just high risk. You got to understand the difference. Back to the article. A troubling development that is occurring at present time, which corresponds to the massive amounts of money flowing into some of these markets, is the rise of private equity that is slowly starting to consume auction houses and grading companies at a feverish pace never seen before. Now, does everybody know what private equity is? It's okay if you don't. I do want to take some time to define it for some of my viewing audience that may not be educated in finance or have any knowledge of these terms. All is what private equity is. It's basically private ownership. So it's usually like a hedge fund or a group of individuals setting up a business. And what they are doing is they're going out, they're either forming a business or they're buying an existing business. And if the company is publicly traded on the exchanges, they are taking it off of the exchanges and putting the business in private hands. So there are companies out there like Collectors Universe. We're going to talk about that later in this article. Sotheby's, Christie's. that used to actually have their stock traded on the open financial markets. Private equity came in, they bought up these companies, and they made them private. As a result of being private, they no longer have to put out quarterly or yearly financial reports. As a result, that level of transparency is now no longer in existence. It's behind closed doors. That's what makes this so inherently risky. So let's go back to the article. There was once a time in the antiques and collectibles trade where at least some of the top tier firms that cater to these markets were publicly traded enterprises. Case in point, there was once a time when Christie's, Sotheby's, and the Collectors Universe were all publicly traded companies who were required by the SEC, Securities and Exchange Commission, to publish quarterly and yearly financial reports. These reports, for anybody educated in finance, were known as either the 10Q quarterly report or the 10K annual report, and they provided valuable insight and transparency to not only the company's shareholders, but also their customers. And this is something that is sorely missing in the overall antiques and collectibles trade. Those of you that do business, I'm going to pick on Hakes or Heritage Auctions is a good example. Heritage Auctions is one of the biggest auction houses that caters to the collectibles trade at present time. If they were a publicly traded company, you would be able to see specifically how much money they took in, where they're spending their profits, where they are making most of their money. All this information would be readily available to you. Since they are a privately held enterprise, the average consumer, the average client of theirs has no visibility to any of this. Now, I want to make this very clear. I am not disparaging Heritage or Hakes or any of these auction companies for remaining private or choosing not to become a publicly traded company, because that is a nightmare in itself. There's a lot of regulation. There is a lot of risk there as well. But what I am saying is, it's very ironic to me right now in the year 2024 when we have record amounts of capital flowing through to the antiques and collectibles trade from an investment standpoint, and there's no transparency. What is happening to this money? Why are billionaires and hedge funds coming into these markets, buying up grading companies, buying up auction houses? For instance, most people don't know this. Are you aware of the Certified Collectibles Group that owns such grading conglomerates as NGC, PMG, CGC? That company is owned partially by billionaire Jay-Z. Yes, Jay-Z, who's married to Beyonce. He owns a large stake in the Certified Collectibles Group through the use of private equity. It would help if there was more transparency. That's all I'm saying. Please, if you are a grading company, if you are an auction company, please don't hate me, my brothers and sisters. You know I love you. You know I send a lot of clients your way. You know I'm also a personal client. I'm not trying to attack you. All is what I'm saying is sometimes transparency and regulatory oversight aren't the demons we make them out to be. Let me continue with my article here. Sadly, today, thanks in part to hedge funds and private equity companies buying up a lot of auction houses and grading conglomerates that cater to the antiques and collectibles trade, this level of transparency is sorely lacking at a time when individual investors are seeing these markets as a viable alternate asset class on par with financial investments like mutual funds, ETFs, stocks, and bonds. In all actuality, nothing can be further from the truth. If you think Wall Street is risky, at the very least, financial assets are highly regulated. On the other side of the proverbial coin, the antiques and collectibles trade is comparable to the wild, wild west, where caveat emptor, let the buyer beware, is the law of the land. Today, as I write this article, there are virtually no publicly traded auction houses or third-party grading conglomerates left. Sotheby's and Christie's are back in private hands. Heritage Auctions, which has made massive inroads into becoming one of the premier auction houses catering to investment-grade collectibles, is also in private hands. Meanwhile, Grading conglomerates like the Certified Collectibles Group in Sarasota, Florida, that grade everything from paper money to coins to comic books to video games are completely controlled by private equity. Even the Collectible Grading Authority out of Norcross, Georgia, which controls the premier toy and action figure grading company, AFA, Action Figure Authority, is controlled by private equity. Now, obviously, private ownership isn't necessarily a bad thing. And let me read that statement again for my critics out there. Obviously, private ownership isn't necessarily a bad thing. After all, this is America, and America thrives on capitalism. However, when we have an extremely unregulated industry, which is being looked at as a rising alternate asset class that is completely controlled by private equity, I think at some point we have to ask the question, is this inherently sustainable and just over the long term? To my critics, I am not directly criticizing private ownership. Obviously, there are hundreds, if not thousands, of smaller, local, and even regional auction houses that are owned and operated by entrepreneurs and small independent corporations. What I am, however, asking is, given the amount of financial capital flowing into these markets, and these markets being seen as an investment, shouldn't some level of regulation, or at the very least, transparency, be warranted? After all, we have seen massive amounts of alleged market manipulation occurring behind the scenes, from the epic graded coin bubble of the late 1980s to proposed allegations of price fixing levied at some of the most prolific auction houses in the trade. If you want more on that, please research alleged price fixing and Google Sotheby's, Christie's, and a plethora of articles will come up. I do have to use the word alleged when I talk about that because both Christie's and Sotheby's claim they have done nothing wrong. I'll let you be the judge if you want to read those search results. Going back to the article here, given these risks and the fact that this market is poised to become worth $1 trillion by the year 2033, one has to ask, who exactly is looking out for the little guy? And if you think this question is controversial in nature, just wait until you hear some of my proposed solutions. We are already seeing the effects as to how this is playing out over the long term. I often lament that when billionaires invest in the antiques and collectibles trade, they do not always go after 100 million plus paintings. Or the dinosaur fossil that hedge fund billionaire Ken Griffin just bought for close to $50 million. Now they are taking aim at owning the auction companies and the grading conglomerates that promote a lot of these collectibles that less wealthier collectors covet. And therein lies the problem. There is absolutely no regulation or transparency in these markets. Anyone operating with an investment mindset in these markets needs to use caution as a result. And that is the end of my rant. It's just a thought. So what do you guys think? Do you guys want to see me do more videos on this? Do you want me to do a follow-up video where I mention some of my proposed solutions? Because I'm going to assure that a lot of my audience isn't going to like some of the suggestions I'm going to make. That will be a controversial video. I just want to know your thoughts. And again, I am going to put a link to this full article in the video description below that'll take you to Antiques and Auction News where you can read this until your heart's content. If you guys feel need to send me a nasty message or leave a nasty comment below, please feel free. I would actually prefer that you leave the nasty comment below because it actually helps the YouTube algorithm. Always remember when I do a video like this, it doesn't get nearly as many views as some of my other videos. So I need all the help I can get, especially when I film a video like this at 1 o'clock in the morning. I'm usually tired, I'm usually angry, and I'm usually a little pissed off when I do these videos. So please, don't disappoint me in the comment section below now, guys. Thank you so much for watching, and in all seriousness, I always value your thoughts. Even if you disagree with my opinion, as long as you're doing it in a respectful manner, I will 100% give validity and give an ear to your differing opinion. Thank you so much for watching, and you yourself have an excellent night. I will see you in the next video.